Medicare charges some people more for Medicare Parts B and D. This is called Medicare IRMAA. It is very bad news. If you're just hearing about this for the first time, this is going to be a long video because it's a complicated topic. Now, in 2025, the average person, like 80% of people, will pay $185 per month for Part B. There is no set premium for Part D. It depends on the plan you buy. So Part B goes up about $10 to $15 a month every year. For 2025, the average person pays $185. So you're like, great, I'm going to pay $185. No, you might be paying $200, $300, $400, $500 a month because you are deemed a high earner, which triggers IRMAA, IRMAA. What does it stand for? Income-related monthly adjustment amount, something like that. So it's just some made-up government term that says you made a lot of money 2 years ago, so you need to pay more for Medicare because Medicare's running out of money. We all know that. The trust fund is running dry. So this is an attempt to make some more money off people deemed high earners. So when they determine that you're a high earner, they're going to look 2 years back. They're going to look at your tax returns from 2 years ago. And if your income hits those thresholds, you'll pay more for B and D. And depending on how much money you made 2 years ago, how much extra you'll pay for B and D. So if you're just getting ready to enroll in Medicare this year in 2025, they're going to look at your tax returns, your adjusted gross income for 2023. They always look back 2 years. So pull out your old tax returns to figure out if you'll be hit with Medicare IRMAA. If you don't want to mess with it, just go ahead and enroll in Medicare, and they will cross-reference with the IRS, and then they'll send you that letter and say, you have to pay more because of IRMAA. These are the actual charts for 2025. There's 5 different brackets, and they can add more brackets. They used to be 3 brackets, and these do change. They go up every year. It's not precisely. We don't know if it's exactly going to go up 3%, we don't know, but it goes up every year. So it's a moving target, which makes this all the more difficult for you to avoid. So if you're just getting ready to go on Medicare right now, you can't avoid it. If you made a lot of money 2 years ago, they're going to send you the letter saying, hey, you look like a high earner. You look like you need to pay more. So if you made less than $106,000 as an individual, no problem. You're paying the standard $185 a month. But if you made $1 more, you made $106,001, now you're in the first bracket of IRMAA. And instead of $185 a month for Part B, you'll pay $259. You'll pay an extra $74 a month the whole year. No, they only do it for 1 year. They recalculate every year. So that is the good news. I'm going to go into this chart again, but I have it on my website, themedicarefamily.com, if you want to look at it. And of course, we update it every year. It's also on my free Social Security and Medicare cheat sheet. If you want to peruse this, if you're getting ready to retire in a couple of years and you're trying to hit this target. So let's keep going. This was Part D, the drug plan. So not only would you pay more for B, which is everything outside of a hospital, you also pay more for your drug benefit. So if I'm $1 over, I'm $160,001, and you just double these if you're married filing jointly. Then I'm going to pay an extra $1,370 for my drug plan. Now, a lot of people are in a state where there are drug plans that might be $0, $1, $2. You'll just add that $1,370 to it. The insurance company doesn't keep the money. They have to give it to Medicare. So if you're married and you do file jointly, it can seem a little bit unfair because I might be a stay-at-home mom. I don't have any income. My husband's making over the $212,000. We're both getting ready to go on Medicare this year, so we both pay extra for the whole year, every month for the whole year, because we're married filing jointly. Now, you might think, well, I will file separately. That's easy enough. And this is not an accounting class. Hopefully you have somebody to give you accounting advice, but this is saying that there's benefits and there's negatives to filing separately. So if you're trying to avoid the Medicare IRMAA, you might be able to avoid the Medicare IRMAA, which might be only $17 or $70 or $80 extra a month, but you're losing other tax advantages. So in most cases, like I said, I'll refer you to your accountant for your specific situation. In most cases, you don't want to file separately. that's going to have more of a net negative than a net positive. Here we are, back at the Part B IRMAA charts. And I have a file right here. There's a column that said married, but filing separately. And you see here, they get you. They're going to get you. So if I am going to file separately for my husband and I'm a stay-at-home mom, it actually might be advantageous. I have no income or very low income. But if I make $106,001, even though I filed separately, they're going to charge me at the high, almost the highest IRMAA bracket instead of up here. Or if I filed jointly with my husband, we'd both pay an extra $74. The fact that I tried to rig the system and I filed separately, they're going to hit me and I'm going to pay an extra $185. So you don't want to wing this. You don't want to just say, oh, it's just easy, I'll just file separately. No, you might do yourself more harm than good based on your own individual adjusted gross income. So not everybody that gets the determination letter from Social Security that the IRMAA has been triggered, not everybody will have to pay it. A large percentage of you will get the letter, have the panic, and then realize that you can appeal it. This is the form that you can easily Google, SS-44, to appeal it. Now, this form will tell you that if you have one of these life-changing events, you got married, you got divorced, all these things happened, that you can appeal it and you can get out of the IRMAA. You just got to send them proof within a certain timeline, and they will take it away. The biggest one that people need to appeal it is because they quit working. They retired. So when I was working last year, I was making $200,000, but I quit. Now my income is going to be about $30,000. So I'm not making $200,000 anymore. Or like I said, 2 years ago, I was making $200,000. Now I'm not. So just show proof that you're retired. And there's a variety of ways you can prove that. And fill out the SS-44 and send it in. Now, in the meantime, they're going to have determined that you have to pay more so that if you're on Social Security, they're automatically taking this extra out for your Medicare B and D. And it takes the government a little while. So they're going to take it out for a couple months, get your approval, slowly approve it, then they'll refund that money back into your Social Security. So it's unfortunate that there's no way to get ahead of that. I have people say, well, I know they're going to hit me because I had a high-paying job 2 years ago. Can I just take care of this in advance? No, you have to wait till they determine it, wait till they send you the letter, file your appeal, wait till they refund it. And you just have to budget accordingly. I'm sorry. If you don't send any proof, you wasted your time. Now, a common reason that people get hit with IRMAA that is not appealable, you're just stuck, is because they took too much money, taxable money, out of their tax-deferred 401k or IRA. Not a Roth. A Roth account, you already pay taxes on it. No problem there. But when you take money out of these types, and there's others, 403b and TSB, other tax-deferred retirement accounts, when you take that money out, taxable income drives up your adjusted gross income, which can trigger Medicare IRMAA. So this is the mistake that people make. They're like, well, I retired and I had $100,000 in my 401k at work. I didn't really know what to do with it yet. I wasn't sure if we were going to buy a mobile home or put in a stock. So I just stuck it in my savings account and I'm just going to deal with it later. Well, you took it all out without thinking about Medicare IRMAA, and you triggered this taxable event, and you did this 2 years ago, so it's not like you can go fix it now, and you can't appeal that. That's just, you made a mistake, and that's a very common mistake. So people always email us, and they say, how much money can I take out of my IRA? Can I take $50,000? Can I take $80,000? How much can I take it? And you're going to have to go look at the IRMAA charts, and I'll show them again here. And you're going to have to look at your adjusted gross income. And you're going to have to try to guess, right? Because they change, it goes up a little bit every year. So you have to work this out with a certified financial planner or an accountant. And I'm warning you right now, most of them do not understand the IRMAA chart, so you might be on your own on this. We cannot give you financial advice. We can show you the tools and educate you, but you're going to have to do it. And like I said, most financial planners, most accountants, most attorneys are very unfamiliar with this. Sorry. So another reason that people they trigger the IRMAA, that again is not appealable, you're just stuck paying more for Medicare for a year, is because they sell their business. Now, you could structure the sale if you're thinking about selling your business so that they pay you out over 5 years, right? Maybe you want the money immediately, but there are some ways to structure these payments. Like I said, structure your withdrawals from your 401k and your IRA to stay below the Medicare IRMAA. Selling a house. This is a big problem because a lot of times elderly people are in a second or third marriage. So they move in together and they got the other house. So eventually we're going to sell the other house. Is that going to hurt you? Are the profits from the sale of this house, rental house, vacation property, land, are they going to cause Medicare IRMAA? Yes, they can. Yeah, they can. Now, tax exemption on your primary resident, which they've already talked about changing this. So if you're watching this video after 2025, they might have changed these exemptions. They've kicked that around because they haven't changed them in years. But if I sell my primary residence, it means I've lived there 2 of the past 5 years. I'm a single person, I'm a divorced woman, of my profits, I can exclude $250,000. So a lot of people have lived in that house for a long time. They bought it for $80,000 and now it's worth $600,000, right? So big profit. If I'm single, I can exclude $250,000. The rest of those profits, yeah, that's taxable. That's going to hit your Medicare IRMAA for 1 year. If I'm married, we can exclude $500,000. So this is where it's tricky if you're going to sell it now or if you want to rent it for 5 years. Remember, you have to live in there 2 of the past 5 years. If you're a couple that's remarrying, you got to think about this and get a strategy. How about you get a large severance package at work? Income, taxable, and even something like gambling, you hit a jackpot. Taxable income. Taxable income goes up, it's going to impact your Medicare 2 years in the future. How about an inheritance? Inheritance is typically a happy thing. An inheritance is typically tax-free. Unless you inherit a tax-deferred vehicle like you inherit your parents' IRA or 401k. So if you inherit their IRA and they were already taking required minimum distributions, you have to continue to take them now. And like I said, this gets into a more complex discussion I want you to have with your financial planner or your accountant. But I'm just giving you a basic understanding, okay? I'm triggering this so that you can go talk to other professionals in your life. So if I get an inheritance of an IRA, when I take that money out, and sometimes you have to take it out right away because of required minimum distributions, and in any event, the new law requires you to take it all out in 10 years, how much you take out will be taxable income, will impact your Medicare IRMAA in 2 years. Do I have any good news? I get accused of not having any good news. Okay, yes, I do have a little good news. Social Security and the IRS, Social Security administers Medicare. So that's why I'm talking about Social Security instead of Medicare. I know. More confusion. Social Security and the IRS, they cross-reference every year. So they're going to get that information from your tax returns from the IRS, and then it's readjusted annually. So I might, if I just start Medicare this year at 2025, I might get hit with the Medicare IRMAA. Because, like I said, I took all the money out of my 401k 2 years ago. But since then, my income's gone down. I'm only living on my pension and my Social Security. I won't be hit with it every year. I was just hit with that once, which can still hurt. It can still be about $6,000 for a couple for 1 year. But the good news is you won't have to pay it necessarily every year. So again, let's look at the charts here. I'm a married couple. We file our taxes jointly. Together, we made over $212,000, just under $266,000. We'd each pay $185 extra per month for Medicare Part B. We're on Social Security, so they'll just take it out. And they're going to take out $74 per month extra for Part D. So if our drug plan is paid for through Social Security, boom, it's all gone. Again, Part D, the drug plan, you're going to get hit with both of these. Now, people say, well, I don't have a drug plan. I don't want a drug plan. Or I get my drugs through the VA, so I don't need a drug plan. Or I get my drugs through my union or through a federal employee. There's people that get drugs elsewhere and don't ever enroll in Part D. If you're not enrolled in Part D, you're not getting hit with this. If you're not enrolled in Part B, you're not getting hit with the Part B IRMAA. So some people structure their retirement around that. Remember, you also can't avoid this surcharge because this is from government, the Medicare government at the top. No matter what insurance plan you have, you still have to pay it. You're not going to escape it by having Medicare Advantage. The Advantage company will require that you pay them the money, and then they just send it up to the government. They don't get to keep it. So what have you learned here? You've learned that IRMAA is a possibility, and it's a possibility at any time in your retirement. And you really start looking at IRMAA 2 years before you want to retire. So for a lot of people, that's at 63. So people come to me at 60 and they say, should I sell my house now? You know, there's a lot of considerations when you should sell your house. But I'll say if IRMAA is your consideration, do it before 63 if you're retiring at 65. They go, I think I want to work till 70. Okay, fine. Whenever you do want to work till and start Medicare, then back it up 2 years. Anything you do in that 2 years, that will impact your Medicare. Selling your house, taking distributions out of your 401k, out of your IRA, winning the lottery. So just back it up and just know that they recalculate it every year. So you're never out of the woods from 63 on, as long as you're on Medicare. This is a possibility. It's a moving target. It's hard to get advice for people to advise you, financial planners and accountants. We can't advise you at the Medicare family. What we do is we pick up the pieces after you come to us and you say, I've enrolled in Medicare. I got hit with the IRMAA. We can advise you on how to appeal, when to appeal, and what that looks like. And then whether you're going to win your appeal because you quit working, or you're not going to win the appeal because you did something else that's not appealable. And then we help you enroll in your plans. So that's the Medicare family. We help people in all 50 states. We are licensed wherever you live. Our services are free. Third generation family that would love to help you with your Medicare decisions. I hope you found this valuable.
If you like this video, you might really like this video. Check it out. And we'd appreciate if you subscribe to our channel so you never miss a great video. We put out one every week. Check in the description below this video for a link to our cheat sheet on Social Security and Medicare. And you can also give us a comment. If you have a specific question, always feel free to call us or email us at the Medicare family.